All right, good morning, everybody. We are going to start off our webinar. This is on business formation for scientists. I'm Dr. Lyle Burgoon, and thank you for joining us today to talk about how to form your businesses. And first off, I just want to give a little story, a little bit of background on this. For those of you in the United States, you know that right now science is not exactly the best profession to be in, especially if you work in the government or if you work for contractors that support the government or even at academic institutions. It's not exactly a great time to be a scientist right now. And one of the things that we have going on is, layoffs, et cetera. And so what's happening is, it's a good idea to have in your back pocket a business that you can move over to should you lose your job, be laid off, et cetera. And so we're going to talk about the first steps in forming a business today. And this is aimed mostly at scientists. So we're going to go over the different kinds of business types. We're going to go a little bit over business registrations, talk about the differences between employees and contractors, which gets really, really hairy very quickly. And that can cost you a lot of money and get you into massive legal trouble. And then we'll talk about some other things and then answer any questions that you might have. There should be a bar to your side where you can ask questions as we go through. So to start off with, there's lots of different types of businesses. And in fact, this isn't the full list. These are the most common types of businesses. But one of the things that you need to think about if you're going, before you start a business, this is probably the biggest decision you're going to make, is what is your business or how's it going to be structured? So the easiest one is a sole proprietorship. This is the way I like to think of it in my head is you're like a shopkeeper and you buy inventory and you're selling it under your name. So it could be like, in my case, it might be, Burgoon's Books, right? And so I have a little bookstore. I could sell it under my name. And that would be a sole proprietorship. It's the easiest business to set up. Most states don't even require you to register it. Some cities might require you to do a registration. So you need to look into that a little bit. But sole proprietorships are the easiest to do. The reason why we generally don't suggest you do a sole proprietorship is because you can be sued personally and lose all of your assets. Yes, all of your assets. So kiss your bank account goodbye, your retirement account goodbye. If you have college savings for your kids, that's at risk too. So sole proprietorships are not the best things in the world, especially as scientists, working on your own. Typically, we're going to be consultants. And so if you give somebody bad advice, you could get sued. If you're a sole proprietorship, you could lose everything, including your house, your cars. So if you have exotic pets, you could lose those too. So you want to be very careful about sole proprietorship. Partnership is the next one. If you are going into business with another person, you could form a partnership. You and this other person are going to, or other people, you could have lots of people, you all own the business. Generally in a partnership, it's going to be equal ownership. So if there's four of you, you each own 25% of the business. And when you go to make decisions, you have to have some way of saying, well, this is what we're going to do. Typically, you're going to put it to a majority vote. So if you think something's a good idea and you can convince two of your business partners it's a good idea, then it'll probably happen because there'll be 75% of the vote. In cases where you have 50-50 ties, you need to have a way to either break the tie, which can be really hard, or the decision just doesn't go forward. The partnership, one of the reasons why we don't recommend you doing a partnership is because you generally also have unlimited liability, which means, again, everybody's personal assets can be sued and obtained if you lose the lawsuit. Again, so now it's not just you losing your house and your bank accounts and everything else that you own. It's you and your business partners losing all of their bank accounts and everything that they own. So generally speaking, we don't normally recommend people do partnerships either. If, this is a tricky one, limited partnerships are a little weird. And again, only certain people have limited liability in a limited partnership. And those people who have limited liability which means that the only thing that is at risk is their investment in the business, are these limited partners. But limited partners are also what we call silent partners. So these limited partners do not get a vote. They don't get to decide how the business is run. They're literally just handing you money and expecting to get, some kind of return on their investment. The general partners have unlimited liability, so they can be sued for their personal assets. Now, I forget when it was. I think it was in the 70s or 80s. Delaware, all new business things come from Delaware. Delaware is like the hub of business innovation in terms of business structures. Delaware came up with a thing called limited liability companies. Limited liability companies are going to shield the owners so that the only what's at risk for them is their investment in the business. So if the business gets sued, every owner now has limited liability protection. So for instance, if you owned an LLC and you give somebody bad advice and your client sues you because they acted on your bad advice, they cannot get your house. They cannot get your bank accounts. They can't get those things in general. Now, I said in general, limited liability companies and corporations, and we'll get into corporations in a second, have a thing called a corporate veil. And that corporate veil is what separates you personally from the business. Now, if you breach your corporate veil by, let's say, you commingle your business money with your private money, so you put them all into the same bank account, you are no longer separated from your company. And that's usually the major way of doing this. If you're in a corporation and you don't do all of the we call them magic rituals because that's literally what they feel like. You don't do all the rituals, you'll lose your corporate veil. So when you're doing a company, when you run a company, you want to make sure that the company keeps everything separate from you. Because the minute you commingle, that corporate veil goes away, and now you lose your limited liability. And attorneys, when you're getting sued, are going to look for every way to say that you are commingling and that your company is not separate from you. So a lot of the things that we're going to be talking about today are going to be ensuring that you're keeping your company separate from you. And the biggest way of doing that is separate bank accounts. So right now, my company actually has 2 bank accounts because we're over the FDIC insurance limit. That's another thing to watch out for. And I do not touch those personally, ever. Instead, I get paid a W-2 by my company, and that's how, or we do dividends too. So I'll get paid dividends as a shareholder. But I keep everything separate, and I keep logs about, if I'm going to use company property for a personal use, I have logs that log that. And then, at come tax time, I will have to say, okay, I can only count this much of the cost of whatever it was. So corporations, let's talk about corporations. My company is actually a corporation, Raptor Pharmatox LTD in North Carolina. We can use LTD to represent a corporation. If you see Inc., that's usually a corporation. Corp, usually a corporation. Here, the owners have limited liability again. Your owners are actually shareholders, and so they own shares. In a limited liability company, your owners are actually not called shareholders, they're called members. And members, members need to determine how they're going to split up the ownership. And that's done through an agreement, an operating agreement. So in the operating agreement, they decide, okay, so let's say everyone brings $1,000 to the table and there's 4 of you. So the company starts with $4,000 in cash. As an initial investment from the members, then you would split it up, 25%, 25%, 25%, 25%. But somebody could bring 10,000, another person could bring 1,000. So now you get into weighted ownership, right? So those are things you have to think about. It's the same calculations we would do in a corporation. In corporations, we have shares. In limited liability companies, you don't have shares. It's just all part of the operating agreement. Corporations are legally people under the law. So this is where, if you remember, there was a big law thing about campaign finance and corporations are people, and Mitt Romney got in trouble for saying corporations are people. Well, that's what he was referencing, is that under the law, corporations are treated as people. And so that was how that legal theory went about with the campaign finance stuff, that corporations could donate to politicians. Anyway, if you're going to get big, so if your company's going to become really big, or you think it's going to become really big, or if you think you're going to need outside capital, a corporation is the easiest way to go. Private equity would be more than happy to buy you out as a limited liability company or a limited partnership. They'll buy you out. But what they won't do is they won't necessarily take an investment stake in your company. So buying out is one thing. So they're just going to buy you out of the ownership, and then you might stay as an employee. That they're happy to do with LLCs, partnerships, sole proprietorships, whatever it is. They'll do that. But if instead you don't want to give them entire control of the company, you just want them to be a shareholder in the company, the only way that that's really going to happen is with a corporation. Venture capital does not like doing business with LLCs. Private equity absolutely abhors it. So if you think that you're going to get capital, maybe you're going after small business innovative research grants or small business technology transfer grants from the U.S. government, you can certainly go after those as an LLC. But one of the things that the agencies look at is how are you going to get financing for commercialization? And if you say, well, I'm going to get financing for commercialization as an LLC from a VC, there's probably going to be someone like me on the panel who's going to say, nah, ain't going to happen. No VC is going to do that. And sometimes there's even VCs on the panels. And they'll even say, we will not work with an LLC. They have to be a corporation. So that's something you think about. Like I said, they have limited liability, which is nice in corporations. So the other considerations you need to think about are your taxes. Now, what's nice about sole proprietorships when it comes to tax time is that your business income is claimed on your 1040 in the United States as personal tax. And then there's there's several worksheets you have to work out. It's not too bad. It's pretty easy. It's really straightforward. I will say if your partner or if you will have to pay estimated taxes. If you're making any money, you'll almost have to always pay estimated taxes in every one of these scenarios. So just get ready for the idea that you're going to be paying quarterly income taxes. For partnerships, typically you're going to get what's called a K-1. So you're not going to get a W-2 or anything like that because you're an owner. Owners don't typically get W-2s. I mentioned it earlier, and I'll get into why I get a W-2 a little later. You're going to get what's called a Schedule K-1. Schedule K-1, if you're using TurboTax or if you're using Tax Act or any of those, they can handle a K-1. It's not too bad. That documents the amount of income and the amount of expenses and depreciation that are attributable to the given owner. And then the partnership will also have to file a Form 1065 to document the partnership's tax situation. Limited partnerships are a little but more complicated because there's different kinds of treatment for limited partners versus general partners. And your tax software will go through that with you. Most tax software that you can buy, like at Amazon or at Costco or Sam's Club, will handle partnerships. You just have to buy the higher tier, but they do it pretty well. Now let's talk about LLCs. LLCs are tricky when it comes to tax. I shouldn't say tricky. That's not a great way of saying it. LLCs have choices. That's probably more accurate. You have a lot of choices you get to make with LLCs. How do you want to be taxed? If you don't have any business partners, you can go with a sole proprietorship. Absolutely. The IRS allows you to do, it's called flow through. LLCs are considered flow through entities. And so you could flow your income through just the same as you would a sole proprietorship. So you'll be taxed as a sole proprietorship. It'd go onto your 1040. You'd fill out Schedule C and a few other schedules, and that's about it. It's not too complicated. But you only qualify for that if you are the sole owner. That's why it's sole proprietorship. If you have partners, you can't do that. So if you have partners, you could choose that you might want to qualify as a partnership. You could also decide, you know what, I want to be taxed as an S corporation. I have a friend of mine who runs a company. He has a LL, or he hasn't Inc. He's a Florida corporation, but he chooses to be taxed as an S corporation, and that's perfectly fine. There's lots of pluses and minuses to being taxed as an S corporation, and when he did it, there was a lot more advantages at that time. The 2017 Tax Cut and Jobs Act actually took away many of the advantages of being an S corp. I choose to have my company taxed as a C corp. There's a lot of pluses and minuses to that. The one thing that many people don't like is what we call double taxation. So the C corp, the company is going to get taxed on its income, and then when I get dividends, I'm going to be taxed on those dividends as generally ordinary income. Now, having said that, there's a lot of pluses though, and this is one of the reasons why I choose a C corporation, is that because my business is small and I have a few people that work for me, I have what's called a QSERA, which is a qualified small business health expense reimbursement account. Every one of my employees has access to a QSERA under various IRS rules. And if I was an S corp, I could not qualify as an owner for the QSERA. But because we're a C corp, I actually qualify as a shareholder to have a QSERA. And the QSERA, for those of you who aren't familiar with it, is very much like probably the easiest way to think of it is like an FSA, a flexible spending account, a healthcare flexible spending account. One of the catches to a QSERA is you have to have qualifying health insurance, which basically means it needs to meet the basic requirements under the Obamacare law. Anyway, so there are pluses and minuses. You really should talk to a tax advisor about tax, how you should choose to be taxed. Once you've made that choice, the IRS really doesn't like you changing it. So that's a very important conversation to have with a tax advisor. Corporations, I already mentioned, they can be taxed as S corps or C corps. There are advantages, pluses and minuses to both. We chose to do a C corp for my company for our taxation. And, I'm not too worried about having my dividends double taxed, just to be honest about it. So the next thing we want to go through, and this is actually the crux of what I was thinking of when I first put together this webinar, is this is the part that's really confusing for people. The 6 elements of small business registration. And this is, besides the tax thing, which is really, really, really critical and important, and most people don't give it enough time, this is where people tend to make mistakes that can either cost them time, cost them money, and possibly jail time. So let's go through this. And this is not a big decision that you have to make, but you do need to figure out your address first. Are you going to have your business registered at your house? And if you do, and you live like where I live in Apex, North Carolina, I actually need to get permission from the town first. And then there's a form I have to fill out where I have to answer a series of questions about, are people going to come here personally? Am I seeing clients out of my house? Am I baking things in my house to resell? Am I making food to resell? Just a bunch of questions like that. And then they will make a determination as to whether or not you can operate out of your house. Because what you're ultimately doing is you're asking for a zoning exemption. Because we are zoned residential. I can't have a commercial business in a residential zone. So that's what you're actually asking for, is a zoning exemption. So you need to figure out what address you want. Now, there are companies, and we use one of these companies, to have what's called a virtual office. And, we have a virtual office. It's in Research Triangle Park, North Carolina. And we could use our virtual office address as the official address for getting all of our mail and for registering our business. We chose not to. We actually registered the business out of my house. And then we tend to send a lot of mail over to the RTP address for various logistical reasons. Once you have your address figured out, and the other option is you could have a registered agent. So really what this address boils down to is, this is this is probably the easiest way to think of it. This is the address where your court papers are going to be sent to if you get sued. That's really what this boils down to. Or when the state needs to ask you questions, this is the address where things are going to go. You can pay for, there are companies that do this, UPS store does this, a few others do as well, where you can have a registered agent. And that registered agent will take care of handling all that paperwork that comes to you. You could pay them to actually open the envelopes and fill out the paperwork on your behalf, things like that. Different registered agents will do different things for you. Attorneys will also do this. So that's another option. When my parents started their retail store, my parents were like, we don't want all this stuff coming to us. Can't we just pay you to do it? And the attorney's like, sure you can. So the attorney takes care of all that for them. Once you have the address figured out, the next step is your state registration. In most states, this will be done through the Secretary of State's office. There are some states where this is handled through a different office. What you're going to Google is business registration, and that will usually get you there. So business registration, my state, that'll get you there. I know some of our folks are in other countries. I'm not exactly sure how you would do it in lots of other countries. The most foreign place I could give you advice for is Iowa or Oregon, because I've done this in both of those states. State registration isn't that big a deal, but you need to make sure that you are registering your company. You need to make sure that the name that you want is not already taken, because then they'll send back your paperwork and say, oh, that name's already taken. You got to come up with a different one. So you can look up typically in the state and see what names are already taken, and then you can figure out a name that you want to use. State registration is usually not very expensive. It's usually pretty quick. Most states will give you a form. Some states, I think Iowa's changed it now. Iowa now gives you a form. Back about 2012, when I was registering a business in Iowa, my parents and I started a real estate business over there. It's kind of funny. The state didn't actually have forms. Illinois had forms, Michigan had forms, North Carolina had forms, Iowa did not have forms. In that kind of case, you can actually go into the state statute, and it will tell you explicitly, and the state of Iowa at that time actually told you, go to this statute, and it will tell you exactly what you need to write in a Word document and send it to us with a check for $20. So it's pretty simple. You just had to do a little homework. But again, you can hire an attorney to do this. You will pay out the nose, but you can certainly hire an attorney to do it. Once you have your state registration, the very next thing you do is you get your IRS EIN. I don't care if you're not going to have employees, and I don't care if you're a sole proprietorship. You should probably get this anyway, mostly because you are going to have to give this EIN out constantly to your clients so that they can file a 1099. So if you don't want your Social Security number going out to people you don't know, file for this IRS EIN. This is an employer identification number. If you're going to have employees, you have to have an EIN. It's quick. It doesn't take very long. It's online, and you will get this computerized letter from the IRS that says, here is your new EIN. It's very quick. There's no excuses not to do that. You do that as soon as you have your state registration done and the state has processed it. So depending upon your state, it might be a couple days, but once the state says that they have accepted your registration, that's when you go get the EIN. Don't do it until the state says we've accepted your registration. Once you have your EIN, that literally only takes a few minutes. Then you can open up your bank account. Don't go to the bank until you have your EIN, because if you do, they're going to say, well, we'll use your Social Security number. And then you tell them, well, actually, I'm doing a corporation. If you're doing anything other than sole proprietorship, then they're going to say, oh, well, you got to wait. You got to wait until you have your EIN. So you're going to go to the bank and you're going to have your EIN. But the other thing you're going to have is you're going to have your formation documents with you as well. And if you're doing a corporation, you need to have your very first meeting of your board of directors. North Carolina allows corporations with only one board member. So I am the sole board member of my corporation. I had to have a meeting with myself. I had to document that meeting as minutes, stating that I was approving the company to open up an account with the first one, I think, was with a credit union. And then the next one was with Bank of America. And so I had to have a meeting with myself, document the meeting, write it out, have these meeting minutes in a Word document. I print that out and I go there to the bank with my letter from the IRS of what my EIN is. That's typically all you need. And then the bank will open up an account. Now, once you have that bank account set up, you can start putting money in there as the first investment. This next thing is critical, and this is where if you don't do it, you could be liable for lots of monetary fines. I don't know that you can get jail time anymore, but you might be able to get jail time for it too. All small businesses need to register with FinCEN. FinCEN is the Financial Crimes something network. It is through the Treasury Department, and Congress passed a law a few years ago that said all small businesses need to register with FinCEN so that they can monitor what's called money laundering, right? Now, this has gone through the courts several times, and it finally made its way through appellate courts and everything else. And this is now pretty well set in stone. So don't think you're going to martyr yourself and say, well, I'm going to not do my FinCEN registration and they can come after me and then I'm going to sue them and I'm going to get a permanent injunction. No, this has already been litigated. This is now settled. No one in their right mind is going to try to sue to block their FinCEN registration. You have to register. It's like the Selective Service for Men in the United States. You have to do it or bad things are going to happen. You can go on the website. This is FinCEN and you're looking for the Beneficial Ownership Information Registration, BOI is what they call it. So you need to do that. The monetary fines are huge. It doesn't matter if you don't like it. There's a lot of things we don't like. You have to do it. Okay. After you get your FinCEN registration, because you have a very limited amount of time to do FinCEN registration, and after the state has told you your business is registered, I think it's 30 days. So you got to get on this real fast. The next thing you want to do is your state tax registration. So this is where you're going to register to pay your state taxes. If you have employees, you're going to have employment taxes that you're going to pay, unemployment taxes, all those things, all kinds of taxes. So that is the next thing you do is you get your state tax registrations. Okay. If you already have your business established, I actually had to go through this a month or two ago. I have a remote employee out in Oregon. Because they are remote and I only have one employee in Oregon, I was able to register for a business identification number in Oregon without actually registering my company as what we call a foreign business. So if I actually open an office in Oregon, then I would have to have what's called a foreign business registration. And so then that allows me to do business in Oregon, which is great if I want to do business in Oregon or have an office there. I don't really want to. That's why I have a remote person there. And so, there's additional filings that you have to do. Basically, you're doing the state registration all over again, except it'll be as a foreign business. And then you don't have to do all these other steps because you've already completed those. But that's something to consider. Okay, I mentioned employees. The first thing I want to tell you is I'm not an attorney. I'm not providing you legal advice. Do not take anything I'm telling you as legal advice because it's not. I'm giving you factual information. You need to decide based on your facts and circumstances how you're going to use this information. Okay, there. That's the disclaimer I have to give you. When in doubt, remember, always consult a business attorney. They are amazing, amazing, amazing people, and they want to help you. They also want your money. That's why they want to help you. Anyway, what's the difference between an employee and a contractor? So if you've followed anything that's been going on with Uber over the past several years, that is a really good example of this debate between what's an employee and what's a contractor. If you're going to have employees, there's additional registrations that you need to do. The biggest difference between an employee and a contractor is this. Think of them as plumbers. If you have a plumbing issue in your house, do you have to train the plumber who comes to your house how to do anything with your pipes? No. Do you tell them how to do their job? Well, if you're a good human being and you want the job done right, you're probably not going to interfere with what the plumber's doing. So you're not telling them how to do their job. You're not telling the plumber which jobs to do and when to come and go, right? The plumber kind of pretty well comes and goes out of your house as they need to, And if they need to work a different job and fit you in somewhere, that's what they're going to do. They don't check in with you for your permission. Okay, that would be a contractor. Now, if you have someone who you have to give them training, probably not a contractor. If this person doesn't come with their own tools, probably not a contractor. If you can tell this person when to work and what to work on, definitely an employee. So that's kind of the thing. So just think about, contractors that come to your house. Those are contractors. Now, is the person that you have in your business someone that you treat like the plumber, or are they someone who you give direction to, etc.? And that's really the difference between employees and contractors. There's really complicated tests that you could use from the IRS at the IRS website to determine if you have an employee or a contractor, and that's a lot of what Uber was going through. One thing you don't want to do is you don't want to misclassify an employee as a contractor. The reason why contractors are so nice to have, to be honest, is because you're not paying employment taxes. You pay them money, they have to deal with all the rest of the tax mess. If they're employees, you have to worry about workers' compensation insurance, depending upon how many employees you have. Like in North Carolina, I think you need to have, 2, 3, or 4. I forget what it is. I think it might be 2. 2 employees requires you to have workers' compensation insurance, unless they're both executives. You need to worry about payroll services, all these other things. It's not as cheap to have an employee as it is a contractor. And so that's why companies sometimes will misclassify on purpose employees as contractors to avoid a lot of those additional expenses. So I went through a lot of stuff really quickly. This is some of the services. Raptor Ventures is a vertical within the larger company, Raptor Farm and Talks. Some of the things that we do provide is business coaching. So we can coach you through difficult issues that you might have. Again, we're not attorneys, and this is coaching. So if you want advice, we can give you advice, but generally we don't like to do that. Instead, we like to help you discover what the answers are yourself. So we generally take a coaching approach. If you don't understand your market or how to identify your competitors and how to exploit and defend against the future, that's something we offer through our strategic intelligence product. If you need help with business planning, that's something that we also offer as well as helping people with SBIR and STTR grants. If that's something they're interested in, we do have a network of investors that we are familiar with that, given the right circumstances, we might be able to also introduce you to. So I'm going to put up this slide here. If you have any questions, I believe there is a comments or questions thing somewhere on the screen. It's been a while since I've used this on the other side, so I can't quite remember where it is. But certainly pop in some questions if you have them. I'll stick around for a while. You've got my information there if you have questions, want some services. And then you can also find me on LinkedIn if you have things you want to say, etc. So go ahead and take this time and drop some things into the chat if you have questions. If not, then have a wonderful day, and hopefully the weather's nice where you are, and you can have a great Thursday here. So a great almost start to your weekend. Thank you.